Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Karl Alomar, who's the Managing Partner at M13, a venture capital firm focused on early-stage consumer technology companies. Karl, welcome to the program.
Thank you. How are you?
Hey, doing great. At the time of this recording, we are early 2022, so we're launching into great things. So I'm excited to hear about what you've got going on. Give us a little bit of background of your entrepreneurial journey and what's led you to this point in your career.
Sure. Happy to. It's been a relatively long journey, at least from my perspective. So, in the 90s, I actually graduated as an engineer and really started my career as an engineer, but very quickly went into launching and kind of starting my first company in 1997 and spent the next 20 years really mainly as an operator and really building technology companies. So built the first one in 97, sold it in 2000, then went and did an MBA, and then built a fintech company in the 2000s. We grew to about 140 million in revenue in 2009. And sold in early 2010. And then my third main role was as a chief operating officer. I joined the founding team of a company called DigitalOcean back in 2013. And pretty much when they first launched their first product and helped that business grow from the ground up to about, by the time I left, $250 million run rate, 500 plus people. But since then, the company now has gone public and is probably double that size and doing very well. So, pretty exciting, spread of different experiences and challenges in my career, and really culminated in 2018 when we were kind of getting our IPO readiness in place, and I was given the opportunity to actually jump over and get on the investing side of the business rather than the operating side. And that's what I did with M13, jumped into M13, lots of unique things about M13 that I think really excited me, and have been investing for the past 3 years and just kind of living off the passions and creativity and, the excitement of working with young founders that are building the next big things, really.
Yeah, and through that introduction, it makes me think there's a book in there of all the lessons you've learned, but from the maybe some recurring themes that you've learned through your journey there. What do you draw from that when you now are looking at companies to invest in? Because certainly you've got your actual checklist or mental checklist of, I'm looking for this, they better not have that, they should have this going for them. What are some of the things that are hot buttons for you that you have learned from your past that now you're applying into companies you invest in?
Yeah, absolutely. I mean, the first thing to think about is it's a long game, right? Every company I've been involved in, I was involved in for, 4, 5, 6 years or more, and that was just really building it and setting it up. And so, getting into multiple businesses and just thinking about the journey ahead, it's not about what happens tomorrow, it's about what's happening 5 years from now. So I think the first thing is, really, really important, and I did learn this in my business career for sure, my operating career for sure, is don't get carried away by shiny objects. Don't get distracted by things that look good in the moment. Really make sure the fundamentals are in place. And so from an investment standpoint, what are those fundamentals? What do we focus on? I really, the first and foremost thing is the team. Is this team special? Does this team have the ability to build, these days, a unicorn is like, if you don't build a unicorn, then you're not really building a great return for your investors. It's amazing that I'm saying that, because 10 years ago, unicorns were so rare, but now it's pretty commonplace for successful companies to reach that size. And so, can this team really carry that? Can this team really build that? Do they not only have the innovation and the grit that comes with being a founder, but also the execution capability to actually build and the humility to build the team around them and to build a company of that size? So that's one of the most important things. The other real fundamental that goes with that for me is the underlying business model. Again, this kind of goes with the first thing I said, where sometimes shiny objects really don't have good fundamental business models. They're just shiny because at the moment they're the hot thing. but really understanding what a business looks like at scale and its ability to achieve scale just by looking at the business model and the way that it operates is just incredibly important. And so that's a key area that I really focus on for sure.
Yeah, I love that. When you were mentioning the team, it reminds me of when we watch Shark Tank, and I'm an avid watcher of every single episode, and many times you hear the sharks going, okay, I like the business, the product, that's great, but I'm investing in you, and just the energy and the passion and the foresight that entrepreneur has. So yeah, that's one thing you're bringing up there is the team. Well, who are you surrounding yourself with? And are those people the ones that are going to execute on the vision and mission that you're telling us? Because obviously they're pitching you for investment, so their vision and mission and their executive summary. So let's now see this team, and if you see weaknesses or holes in that team, whatever those might be, maybe that's a cause for you to pause, right?
Yeah, I mean, it's not always a cause for pause. Holes are always fillable, but I think that some of the stuff you're saying is very, very key. Is that the person who is presenting the business to us, can they carry the vision to excite and attract the talent you need to fill those holes?
Yeah.
These businesses are young. They don't have the deep pockets or the resources to go and hire the best on the day that you invest. But you want to believe that founder has the ability to inspire and to attract that type of talent and understands what that kind of talent looks like. And one of the biggest lessons I've learned in my career, when you're a young, brash, entrepreneur thinking that you can do everything and conquer the world, you take on everything yourself, and you don't really take into account the value of the team around you that fundamentally needs to be better than you in so many different ways. And understanding that the entrepreneur has the humility to see that and to work with that and to actually build that caliber of team, and more importantly, inspire that caliber of a team to want to be part of that team. Some of the most exciting companies in our portfolio are really young entrepreneurs that just have this incredible senior executive quality team around them, and they just have this ability to inspire such commitment to the vision. It's really it's amazing to see.
Yeah, it really is. Like you said, any hole can be filled. That's great, but you got to know what you're looking for. You mentioned unicorn, and for people that don't understand, give us the definition of unicorn, because from what I understand, I think I'm right in, it's like, a company that launches and achieves revenue of something like $1 billion within the first year, right?
Well, it's not quite that. It's not the revenue measure. It's more around the valuation. And so,
yeah.
And in this game so long that, back when I first started, getting a valuation of north of 100 million was incredible. And it was like a real success story. And most exits were happening in the hundreds of millions in terms of size. And more recently, and it's really, really been exponential in the past few years. You see companies that are getting valued, raising $50, $100, $200, $300 million in funding, and getting valued $1 billion, $2 billion, $5 billion and north. And there's an ever-increasing pool of those companies. And the reason why investors are coming in at those levels, because their belief is those companies have the ability to become what we would call decacorns, $10 billion valuation or more. So unicorn really references the valuation that institutional investors or the market has placed on your company. And the idea is that, you're still private, but there's this inherent value that's associated with your business. Once you go public, you're not a unicorn anymore. You're just $1 billion company. But
yeah, but you yawn and okay, whatever. Yeah.
Yeah.
It's like if you strive to be a unicorn, it's almost like back in the old days, striving to have your video go viral. It's like that's what you ultimately want, but sometimes you can't set out to make a viral video. You have certain qualities that have to be there, and then it has to be right timing. So in business, you definitely have certain best practices and foundational things that can lead to becoming that unicorn. So that's a whole lot different that way. One thing that I was wondering is, getting back to Shark Tank, I heard a comment once where one of the sharks, I believe it was Kevin O'Leary, that said, you know what, I am out, and here's why. You, in your initial pitch, kept saying, we want to strive to get bought out. We were talking about the end game. And he goes, I don't like that. I don't want you to be looking over the fence at how soon can I get out. I want you to build this thing to grow it. And then if it happens, it happens. What are your thoughts around that? Because building for a unicorn or buyout, that's a good thing. But don't you want founders that are really focused on growing it, for the sake of growing it?
I could not agree more. I would say that, when we talk about unicorns and stuff, I'm really talking about the investor's perspective in terms of what are the capital returns that limited, for their kind of LPs or the people that invest in their fund. When we look at a company and in the companies I've built, one adage that I've always really stuck to and really, really believe in and has worked for me is find what you truly love, find what you're truly passionate about, do it to the best of your ability, be the best at it, and that will create the economic returns that you want it to create as long as you execute at a very, very high level. But be passionate about what you're building. The other piece of it is don't think about building something that's just driving towards a particular exit. Thinking about building a business that will live forever, that has the foundational strength to really support itself forever. If anybody buys your business or if you go public, the acquirers or the investors that are going into the public market are really participating because they think this business has decades of longevity ahead of it, not because you hit that exit point. So the fundamentals are, again, back to the fundamentals, you have to build a business that has lasting power, has longevity. And if you focus on that and you build that, the valuation will come in its own time. Mm-hmm. So be passionate about what you're doing, build it as a long-term standing business that is self-propagating, and then the valuation and the monetization and all of the returns that that we all dream about as we're building these businesses, those will come in their own time.
Love it. Yeah, that makes total sense. So when you are looking at making an investment in a startup, what are some of the mistakes that you see that people didn't prep for in advance? Like they came in and you were looking for a certain thing and you see a gap. What are some of the things that people could maybe in advance of meeting with someone like yourself be working on and focusing on to be better prepared?
Yeah, I would say, to the same theme, right? The most important thing is you have to understand your business and you have to understand your customer. If, we might have an amazing business idea, it might be the greatest concept in the world, but then when I start going and talking to the founders and they haven't really analyzed their customer, they haven't spoken to their customer, they don't know their customer, they don't really understand the business, they've just got this really cool niche idea, then, it's very difficult to really align with the future potential of the business. Mm. So it's very important that when you walk in, you are very, very clear on understanding your category, understanding your customer, understanding what business you're trying to build. And so those are big, big red flags right off the bat when people are kind of shaky on those core aspects of what they're trying to build. And then what I do find also is some people are too salesy. They really come in and they just pitch, sell, throwing big numbers out. You have to make sure whatever you say, whatever you do, is you can back it up. If you don't back it up, you may get through this funding if people need, just kind of are blinded by the opportunity and throw their money in, but you're never going to get through the next one. Yeah. And so you've got to be able to execute on what you're saying. You've got to be able to create a good sales pitch, but a pitch that actually reflects the reality and in due diligence won't fall apart on you. And so, a lot of that is something we see pretty commonly in terms of just people trying to kind of get to that next stage and trying to sell themselves there.
It's interesting you mentioned that because it is so important to be clear. And have you ever read the book Building a Story Brand by Donald Miller?
I haven't, but it sounds like I should.
You really should. It's a spectacular book, Building a Story Brand. One of the teachings he has in there is when you confuse, you lose. And another thing that goes along with that is he says, if you are explaining something to someone and it takes too many mental calories to understand and consume it, they just tune out. So you have to be clear. You have to be concise. People are busy. They're distracted. And I've also heard it said in the industry to avoid technobabble. You might know your thing, and I'm sure in technology space you get this a lot. There's a lot of technobabble, but yet if you're trying to explain it to an investor, they need to know a little bit of the vernacular, but explain it so that it's clearly understood, because that gets right back to what you were talking about here. If you're pointing to too many grandiose things and the sharks say, don't tell me about the trillions of dollars in the market and if we only get this percent, tell me what you're doing. Where's the substance?
Yeah, I agree with that. The Technobabble part for sure. When you hear metaverse, blockchain, cloud, and AI all in the same sentence, there's something's wrong.
Yep, exactly. Yeah. That sounds good.
So
well, Karl, any final thoughts? What's the best way that someone can understand how you could operate, and then how to reach out and connect with you and learn more?
Yeah, absolutely. I mean, just one final thought is that, the way we really approach investing, kind of consistent with how I look at the whole idea of doing what you love, is we're really focused on trying to find great founders and really helping them become as successful as possible, with the same concept of economics will follow. And so we're really, we like to think we're a very unique firm in the way that we partner with founders. And so, we're always really excited to go through that journey and help them and use our experience as much as possible to help them kind of navigate through that. Best way to reach us, obviously, M13 online is m13.co. And then you can also reach me directly, probably through LinkedIn is the best way, Karl Alomar on LinkedIn. And always happy to kind of talk stories, talk journeys, look at businesses, excited to see what the entrepreneurs of tomorrow are going to bring to the table.
Love it. Well, Karl, thanks so much for coming on today. It's been a real pleasure learning from you and what you're doing in the industry. Thank you. I appreciate your time.
Thank you so much.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.